On Business Incorporated today. United Arab Emirates seeks $150 billion investment to grow Asia and Africa trade. Poultry farmers in Kenya suffer as feed prices rise. Egypt's PMI improves at 49.8 points as purchases increase. Hello and welcome to the program. I'm John McCowell. Let's start with intraday market numbers. A marginal gain in Nigeria may change the bearish dominance at the Nigeria's exchange. It was up 0.05% at intraday. South Africa's JSE was on the flip side, shedding 0.13%. Egypt was in the green. The EGX 30 gained 0.07%, while Kenya's all-share index closed negative, losing almost 1%. And that was on Friday. Well, first trading day in the Middle East was a mixed bag. Abu Dhabi lost 0.11% at intraday, while Dubai shed more at 0.20%. Good news in other regions. Both Saudi Arabia added 0.50% and Dubai and Qatar had 0.03%. We move to Europe now, where stocks advanced today after U.S. jobs data indicated the Federal Reserve may have to keep monetary policy loose for longer, while speculation has risen over more stimulus in Japan and China. Also, German factory orders have recorded a surge. Well, we have Christy joining us from Frankfurt to give us the details. Hello, Christy. Good to have you on Monday.
Hello.
So German factories have seen an unexpected surge in orders. What's driving this, and is in spite of COVID and every other thing?
Yes, that's right. We actually saw a 3% increase in orders, or I should say 3% higher than expected for the month. So yes, this was higher than experts had actually anticipated, which seems like good news. The German Federal Statistics Office said that this was driven primarily in a surge in demand for ship exports out of Germany. Interestingly, demand actually within Germany fell, and also within Europe. But outside of Europe, demand increased by 15%, really showing that this is the market that's increasing manufacturing demand for Germany. Now, that being said, this doesn't address at all the fact that manufacturing continues to struggle with supply chain bottlenecks, so it remains to be seen whether these orders can actually be fulfilled.
Well, the flip side is that the construction sector shrank last month. That's what data from markets is showing.
Yeah, that's right, and that's really directly related to my last point about these supply chain bottlenecks. Basically, construction, just like all the other industries, is really struggling to get a hold of the raw materials and the supplies they need to complete their orders. They're also dealing with a labor shortage as well. So when it comes to completing orders, the construction industry in Germany is really struggling very, very much. Now, for a while, residential had been a bit stronger than commercial, for example. Commercial had not been performing well, while residential did show some gains, but our most recent figures show that we saw a slump in residential as well. So this is not boding well for construction moving into the autumn months.
And Italy is seeking an exception to EU's planned phase-out of combustion engines in order to protect makers of high-performance luxury cars like Lamborghini and Ferrari. How likely are they to succeed in their requests?
Yeah, that's a great question. I mean, you're absolutely correct that Italy has started talks with the European Commission about a possible exception for these high-performance cars, which really are a key export from Italy. We all know Italy is known for its fast cars. Basically, the European Commission decided in July that European countries need the production of cars that rely on a combustion engine. Now, Italy is saying that there should be an exception taken for small niche car makers like these ones who also have a very particular type of engine. They basically say that these manufacturers don't have the economies of scale in place to do a transition by 2035 that maybe a large German manufacturer like Volkswagen would have. So the European Commission will be taking feedback on this decision over the next couple years for countries and companies can give their input. And some people have said that the overall emissions from this niche car sector are so small when it comes to the overall car world that really it's negligible in the end.
Well, we'll see if that's negligible or not. Well, thank you so much, Christy, and enjoy the rest of your day.
Thank you.
So let's move to the UK now, where Juliana is standing by, as usual, to bring us up to date. Hello, Juliana. Good to speak with you again.
Good afternoon again, Innie.
Good afternoon. Well, the UK's regulators are now considering whether they should take over control of crypto promotion, citing concerns that these promotions can be quite harmful. And not long ago, we had the UK regulator, so they cleared the Binance for a while. So what is this about?
Yeah, this story is come from Charles Randall, who's the FCA chair. He's been speaking at the Cambridge Symposium on International and Economic Crimes. And he actually cited somebody, I'm not sure if you're familiar with this lady, Innie, called Kim Kardashian, who has a whopping 250 million followers on Instagram. And she's been named in this talking point because a couple of weeks ago, she was paid a very nice figure by a crypto firm called Ethereum Max, not to be confused with Ethereum. And therein lies the problem. The chair of the Financial Conduct Authority says, Ethereum Max has been developed by unknown developers. It isn't regulated. And the fact that she promoted this speculative digital coin on her platform could potentially be one of the biggest promotions of an unregulated digital coin in the history of cryptocurrencies. And therein lies the problem. I get it. I'm sure lots of our viewers get it. When you scroll through Instagram or WhatsApp, lots of people are promoting these digital currencies, promising heaven and earth, but they cannot be guaranteed. So it's the speculation around cryptocurrencies that the FCA is really trying to put their finger on at the moment. You just mentioned the issue with Binance, and there are several other concerns. What Randall was saying is that yes, it is important to promote innovation, because obviously lots of people within the industry are saying central banks across the world are trying to stop that. But the FCA say consumer safety is of the utmost concern, and that's why they are really keen on stamping out lots of these speculative promotions.
Yeah, well, crypto is has a lot of conversations around it. I think it's going to stay that way for a while because, people are still trying to get used to it. But a new study conducted by Yorkshire Building Society shows that Brits were able to save more during the pandemic, and many are still falling short of what they would need to feel financially secure. How's spending looking now? Are they giving out some of those millions of pounds that they kept in their house, the loose change?
Yes, there is. The pandemic has changed lots of things for lots of people, and I think one of the main talking points that came out of this report that was published by the Yorkshire Building Society in partnership with the Centre for Economic Development is that people don't have enough savings. Yes, people have saved through the pandemic, the shock of the pandemic alone, and the fact that, of course, consumer habits change. You couldn't go for a drink after work or go for parties on the weekend. People were able to keep that money in their back pocket. But people have now started to realise that, oops, I don't have enough money in the bank. And according to this report, the amount of money that Brits would need to feel secure if anything bad were to happen, is about £17,500 in their bank account. And the majority of people in the UK, I'm sure you won't be surprised to know, don't have that in their bank account. And the average falls short of about £7,000. So yes, I think, you know, people do have a lot more and people are being a lot more cautious. But the pandemic has heightened worries that, you know, if, you know, a pandemic like this does come around again, do they have enough money to feel secure? And they don't feel like they do have at the moment.
Well, I'm not surprised when you say people don't have that much, because the pandemic really did deal a lot with people. Well, how's the market doing this first trading day of the week?
Yeah, the market's in positive territory at Intraday. The FTSE All-Share is up 0.62%. The FTSE 100 also up by 0.71%. And the FTSE 250 is up by 0.18%. In the currencies market, the British pound is currently down on the US dollar by 0.17%, also down on the euro by 0.03%, and down on the Japanese yen by 0.03% also. Bit of a quiet week here in the UK. However, we did have PMI, final PMI data for the construction sector, showing once again that private sector growth is slowing in the UK. And as we were discussing this morning, lots of this is down to supply chain disruption.
Yeah, happening in many parts of the world. Well, thank you so much, Juliana, and enjoy the rest of your day.
Thanks, Innie.
So let's move to Asia now, where stocks rose this morning with shares in Japan and China seeing big gains. Japan's Nikkei 225 was among the biggest gainers regionally, rising 1.83% to close at 29,659.89. Mainland Chinese stocks also saw robust gains on the day, with Shanghai Composite gaining 1.12% to 3,621.86, and the Shenzhen Component jumped 2.5% to 14,546.60. Hong Kong's Hang Seng Index rose about 0.9% as of its final trading hour. Elsewhere, South Korea's Kospi ended the trading day fractionally higher at 3,203.33. In Australia, the S&P AX 200 closed about 0.1% higher at 7,528.50. MCSI Broadest Index of Asia Pacific shares outside Japan rose 0.56%. Well, let's do a little bit of conversation now. The shortage of soybean is assuming global proportions and increasing demand due to low availability in weather-hit countries. This has resulted in the premium on non-GM soybean hitting the rooftop as high as $280 a ton. And Kenya farmers say the price of 70 kg bag of dairy meal has gone up from 2,000 shillings to 2,350, and that's in 2 months. And that's between $220 to $250. In Kenya, manufacturers of animal feed want the government to allow importation of yellow maize and soybeans to cushion the farmers against the prices. Well, to tell us what's happening now in Kenya concerning this, we have Abednego Kiwia, Associate Program Officer at Alliance for Green Revolution in Africa. Good to speak with you, Abednego. Good afternoon.
Good afternoon.
So what's going on now? How has this affected the price of, eggs, bread, and things that are connected to feed meal?
Well, thank you very much for that question. Yes, in Kenya, what happened is the long rains of between March to July were not good. The rainfall was very poor. And so crop productivity was also affected. And much of the animal feed, including the raw materials that are used to make these concentrates for poultry feed, became scarce. And so that is the reason why the prices for poultry feed has gone high. So it's about the forces of supply and demand, because now people are competing for food. The animals are also competing for the scarce food because the rainfall was poor. Then the prices have gone high.
So does it seem like the government is going to allow this importation that the farmers are asking for?
Well, as it is now, there's a lot of consultation between the government and the stakeholders. You might be aware of, like now, one of the biggest convening taking place in Nairobi now, known as the African Green Revolution Forum, which is actually coming 2 weeks ahead of the United Nations Food Summit, Food Systems Summit. So both, the government, the private sector, the farmers themselves are talking, and in a forum which is ongoing, which actually began today, we have these stakeholders talking and trying to see how they can solve the problem, facing farmers here in Kenya and also elsewhere in Africa.
All right, thank you so much, Abednego, for sharing your thoughts and bringing us up to date with what's going on with the poultry farmers in Kenya. Enjoy the rest of your day.
Thank you.
In South Africa, the unemployment rate has surged to the highest on a global list of 82 countries. We'll talk about that after the break. Do join us. This is Business Incorporated on Channels Television. You're welcome back. You're still watching Business Incorporated. Well, South Africa's unemployment rate surged to the highest on the global list of 82 countries. The jobless rate rose to 34.4% in the second quarter from 32.6% in the 3 months through March. The unemployment data is likely to deteriorate in the third quarter because the government tightened COVID-19 curbs in the face of a third wave of infections, hindering efforts to revive the economy. Well, let's have this conversation with Matt Kindiger to tell us some of the implication of this. Hello, Matt. Good to have you. Good afternoon.
Hi, good afternoon. Thank you for having me on the show today.
Yeah, so we see this high level of unemployment in South Africa. We know COVID-19 is a global impact. And then in July, of course, we had the crisis, that obviously has contributed to this.
Yes, certainly. So July's unrest certainly has been a big factor contributing to unemployment in South Africa. But it's worth mentioning that the record high levels of unemployment that were reported during the second quarter of 2021 don't take into account the effects of this unrest. So when we see Q3 data released, which is probably going to be towards the end of this year, we are expecting unemployment to climb even further. So certainly the unrest during July has likely destroyed workplaces. It will have a longer term effect on investment into the market as well, which will affect job creation for sure. So certainly we are expecting unemployment data to actually get worse in South Africa before it gets better.
So is this just an effect of COVID?
No, it's not necessarily. The country's high unemployment rate is not just an effect of COVID. So the country is facing long-term structural difficulties with its labor market. It does have very rigid labor market laws, so some of the toughest in sub-Saharan Africa. It also has had a very long period of weak economic growth, which has not kept up with population growth. So what we've seen is the creation of jobs has not really been quick enough to ensure that unemployment remains low. And this has been compounded by the fact that there is a skill shortage in South Africa because the education system in South Africa is not producing enough skilled school leavers or university graduates. So even though there are a number of industries with job shortages or skill shortages, there are a large number of South Africans who don't have the skills to fill these jobs. So there are a number of factors, number of structural factors that have contributed to high unemployment in South Africa. COVID is just one of them. COVID has aggravated the situation, but it's not the only reason.
All right, so any expectation of the government changing its policy or tapering, the rigidity to make it easier and to buffer or deal with this unemployment issue?
Certainly. So the government is painfully aware of the need to deal with it. And I think there are two things we could look at. One is how the government is trying to create jobs, and the other is how it is dealing with the social problems created by high unemployment. So the government has tried to, in terms of trying to create jobs, the government has tried to minimize tax increases this year on businesses because it doesn't want to affect business sentiment. It wants to ensure that businesses can hire where possible, so their tax bills aren't as high. It's also tried to support investment into employment-generating infrastructure projects. So that is one area of government spending that is increasing, government investment that is increasing. So trying to create jobs that way. It's also trying to reduce, it's probably going to be forced to reduce the number of civil service redundancies. So the government was trying to reduce the number of people on the public sector wage bill, but it's probably going to try to slow this down a bit because it doesn't want to create more unemployment. In terms of labour market laws, it's probably going to struggle to make labour market laws more flexible, and this is because of very powerful trade unions in South Africa. But we are likely going to see an increase in social welfare payments, more generous unemployment benefits, and this will probably be paid for through higher taxes on personal incomes among wealthier South Africans. So certainly some tax increases to come, but also sort of state-led employment generation initiatives are expected.
All right, thank you so much, Matt, for joining us and helping us to understand some of those things in South Africa. Matt Kiniga is Associate Practice Lead at Sub-Saharan Africa, Front of View. Thank you so much and enjoy the rest of your day.
Thank you, you too.
So the United Arab Emirates plans to deepen its trade ties in fast-growing economies in Asia and Africa and draw $150 billion in foreign investment from mainly older partners to reposition itself as a global hub for business and finance. It will also expand economic ties with Britain, India, and Israel, where the Gulf state normalized ties a year ago. The UAE's foreign policy will serve the country's economic interests going forward. Asia and Africa have emerged as important destinations for UAE funding, mostly carried out by way of investment through Abu Dhabi's sovereign wealth funds. Egypt's non-oil private sector narrowed for a 9th month in a row in August, but its purchasing managers index inched closer to growth. Local firms rapidly expanded their purchasing outputs and employment on increased demand during August. IHS Markit's PMI jumped 49.8, just below the 50 threshold that separates growth from contraction, compared to 49.1 in July. Egyptian firms worked on building their input stocks in August amid fears that rising new orders and supply-side pressures would lead to further price increases. The sub-index for the quantity of purchases climbed to 54.9 from 47.6 points in July, while the purchase cost sub-index surged to 58.7 from 54.1 points. Angola and the Gambia signed a joint statement on the establishment of bilateral relations. The document, which also aims to strengthen ties of friendship and strengthen cooperation, according to a statement, the interlocutors were unanimous in stating that the ceremony marks the beginning of a new era in trade between both countries. At the regional level, Angola is a member of the Southern Africa Development Community and the Economic Community of Central African States, while the Gambia is part of the Economic Community of West African States. And the National Association of Automobile Manufacturers of South Africa said that vehicle sales improved to 41,425 units, and that's up 33,259 vehicles in the previous year. Passenger cars led the market with a 40% gain, while the medium and heavy commercial vehicle segment saw respective declines of 7.2% and 0.4%. While year-to-date vehicle exports are up 37.7%, August saw a decline of 15.6%, largely due to effects of the civil unrest and the cyber attack on Transnet. Statistics South Africa is expected to give more details on the current state of the economy as it releases the GDP figures for the second quarter tomorrow. Well, that is on the program. Thank you so much for watching. I'm Ini John Mekwa.